Assalamualaikum warahmatullahi wabarakatuh. We, Farah Alia, Sarah Adlina, Nur Hamidah, Nurul Hannah, and Amirul Farhan would like to present our group project for the subject Principles of Financial Accounting 2. As a brief introduction to the business, firstly, our business is a sole proprietorship business, namely Kijutsu Sdn Bhd. This business is a multinational retailer business which sells electrical appliances from over a few qualified electronic brands such as Samsung, Panasonic, and Philips. Our business information are as follows, where the name of our business is Kijutsu Sdn Bhd and the location of our business is Lot 300 Ostia Bangi Business Avenue, Jalan Ostia Utama 43650, Bandar Baru Bangi, Selangor. And we are open from 10 a.m. to 9 p.m. from Monday to Saturday and closed on Sundays.
In this slide, we are going to present about our company's organization chart. Our company is directed by the Director of Kijutsu Sdn Bhd, Ms. Farah Alia binti Muhammad Ali Khan, and for the Finance Department, the Director is Mr. Amirul Farhan bin Azrul, while being assisted by three main accountants of the company, which are Managerial Accountant Ms. Nur Hamidah binti Abdul Hamid, Financial Accountant Ms. Sarah Adlina binti Muhammad Ali, and lastly, Tax Accountant Ms. Nurul Hannah binti Yahya.
Both cash book and bank statement have different balances. As to why they have different balances is because cash book balance consists of some transactions that are not included in the bank balance, while bank statement balance consists of some transactions that are not included in the cash book balance. According to our company's bank statement and cash book, there are a few transactions that are recorded in the cash book but not in the bank statement, and there are also transactions that are recorded in the bank statement but not in the cash book, which results in difference of balances. Therefore, as a solution, our company has prepared a bank reconciliation statement and an updated cash book to correct the errors and omissions made in both documents.
What is cashbook? Cashbook is a financial journal that contains all cash receipts, bank deposits, withdrawal, and disbursement. And what is bank statement? Bank statement is a summary of financial transactions that occurred at an institution over a set time period. This is our company bank statement as of 31st January 2021. Bank statements are a great tool to help account holder to keep track of their money. It can help the company to track the finance and identify errors. The purpose of a bank statement is to summarize the transaction activity during the period. There are some transactions that are not included in this bank statement. This is the cash book of Kijutsu Sdn Bhd. Cash book is important because it keeps the record of transaction in the business. It is simply because every business must be very cautious about its cash management. There are a total of 30 accounts on the debit side and 20 accounts on the credit side. This cash book was prepared by the accountant of our company, and there are a few errors in this cash book.
We have prepared the bank reconciliation statement. Bank reconciliation is the process of restoring the transaction on the bank account of a business that was not the same with transaction in bank statement. There are few steps in reconciliation process. The first step of bank reconciliation is to check the bank statement and cash book to see the transaction that have been excluded. After checking, we adjusted the cash book by adding transaction in bank statement that was not recorded in the cash book, and also corrected the error made by the company in the original cash book. On the debit side of the adjusted cash book, we have corrected the error made by the original cash book that was more than the original amount by reducing the amount on the debit side. Next, we added standing order, direct debit, and credit transfer. This transaction was on the credit side of the bank statement but was not recorded in the original cash book, so we added them in the adjusted cash book. while on the credit side of the adjusted cash book, there were 3 errors made by the original cash book that was less than the original amount, so we added the balance in the adjusted cash book. We also added dishonored check, credit transfer, bank charges, direct debit, and interest allowed by the bank. This transaction was in debit side of the bank statement but not recorded in the original cash book. After adjusting the cash book, we prepared the bank reconciliation statement.
As per what Nur Hamida said before, after we preparing the adjusted cash book, we prepared the bank reconciliation statement. In the bank reconciliation statement, it consists of balance CD of latest bank statement, uncredited check, unpresented check, cash payments that is not being recorded in bank statement, cash recipients that is not being recorded in bank statements, and last but not least, balance per adjusted cash book. How do we prepare the bank reconciliation statement? We put the number that is not exist in the bank statement but do exist in the cash book. For the uncredited check part, we put the numbers that is exist in the cash book's debit side, while for the unpresented check, we put the numbers that is in the cash book's credit side. After do the workings with the numbers, do make sure that the last total is the same with the balance in the adjusted cash book, so that the bank reconciliation statement that we prepared are precise and correct. That's all for our conclusion part. Now we move forward to the recommendations on improvement for our company's future use.
There is some recommendation that can be used to improve the efficiency in handling cash and book transaction and in what way to reduce errors made by the company. The first one, update your accounting books. Some companies always update their accounting books to avoid error just in case. Always update accounting books to show each transaction that used in our company and other parties. Make sure your account books when updating depends on whether your company use cash basis or accrual accounting. There are some tips on how to set up accounting books. The first one is to select an accounting method either on a cash basis, accrual or modified cash basis. Cash basis does not require extensive accounting knowledge. This method only used to record the transaction when money changes hands, meaning your company record income once it receives payment. The cash basis method only uses cash accounts. Accrual accounting requires the foremost accounting knowledge and is longer consuming for little company owners. With accrual, your company wants to record income when the transaction takes place, with or without the transfer of cash, and record expenses when your company bill. The accrual method uses more advanced accounts and allows your company to record long-term liabilities. Modified cash basis or hybrid accounting may be a mixture of accrual and cash basis accounting. Just like the cash basis method, the company records income once it receives and records an expense once making payment. Modified cash basis accounting uses both cash and accrual accounts. Second, use software. Accounting software is the better of both worlds when it involves difficulty and price. Accounting software may be a good option if your company would like to streamline accounting process and save time without having to pay the worth of getting an accountant. Do everything for your company. Don't need to worry about calculating totals yourself since the software handles it for accounting. With accounting software, you record transactions quickly, making it easy to trace incoming and outgoing funds. And by automating your accounting responsibility, it quickly generates reports, create and send invoice, calculate balance, and more. Third is check your records. The only way to detect small error before they become bigger mistake is to reconcile your accounts. Account reconciliation is once it compares the number in your books to an external record, like a statement. After reconciling your accounts, you will possibly discover a mistake in your accounting books. Yours create a replacement journal entry to further or remove money. When keeping a record of your expenses, make sure your company hang on to receipts, bank and credit card statement, invoice, bills, cancel check, proof of payment and more. Final one is save receipts and other documents. Keep the related document and receipt at least 3 years recorded. One can protect your company. Secure recorded document and receipt in the soft copy or hard copy in private space and lock it. It is the only way to protect your important document. However, saving receipt and related document that act as proof for the numbers in your books. These documents are essential if the Inland Revenue audits your company.
And that's all from our group. Thank you.